Hello everyone. All right, let us begin. Watching me live and joining me live in this session and tuning in. Before I start, I would like to just make a disclaimer. I'll be doing a lot of trades in today's session, and most of them involve option trading. Option trading is highly leveraged and it is very dangerous if you do not know what you're doing with your account. Okay, and I hope there isn't much. So let us first pay a visit to the general market, the SPY, S&P 500, which tracks the general US broad market. And you can see that this is the daily chart and this is the current situation that we are in right now. We have a green bullish candle yesterday, as of yesterday close, and it has been obviously been resisted by the 100-day moving average so far. And I've already said before that, so this will be the largest resistance that you will be facing that the market will be facing as it recovers and go into into the moving average, which is the most important, most heavily monitored support and resistance level that is mark out the top and the bottom of the previous down wave that we've experienced in the bear market. So the top being the all-time high at $340, 218, 220 at the bottom of market, at the bottom of the crash, which we have experienced in the towards the end of March. So if you use the Fibonacci retracement tool and mark these levels, that is the respective Fibonacci retracement, Fibonacci ratios and the Fibonacci levels. And you can see that the 61.8% Fibonacci retracement level has indeed been acting as a very strong resistance to this recovery. All right, we can see that the market has been faced with a resistance once over here, and make another attempt to break through it, gets resisted again, and then correct back down again. And then this is the third time it just broke through and gap up above the 61.8 resistance level. So with this, all right, where was I? Yeah. So even though the market has overcome the 61.8% resistance Fibonacci retracement level, we can say that the bear market, bear market, which is this bearish wave downwards, this crash downwards, should mostly be over already, and we should already be back in recovery mode. And many people, the news, the mainstream media, and many people have been saying that the bull market is back again, and they define the bull market by a recovery of 20% from the lowest point of the last bear. Well, personally, I would wait for stronger confirmation. If you have been following my videos, the signal that I follow will be the 50 SMA crossing above the 150 SMA, or the price crossing above the 200 SMA, and all these are all the moving averages are starting to slope up, and I would then have 100% confidence that the market is back in an uptrend. All right. So right now, what is likely going to happen is that maybe the market, what I think is going to happen is that maybe the market is going to like continue hovering around this level, slowly making its way up, maybe resisted a few times again by this strong resistance level over here, and then maybe one day gap out above it if it could not break through this resistance, and then continue its way higher up into back to the all-time high by towards the end of the year. Of course, the opposite could also happen where the market make another lower low and before going back up again. Now, the important question and the most likely question that everybody would like to have an answer to is that whether the market will continue to go back down and visit the previous low again, the previous low of this bear market. Well, to me, I think that it is unlikely, although not possible, but it is very unlikely because as from the looks of the situation right now, the coronavirus, things are already starting to recover, and the economy is also starting to recover, and people are starting to go back to work in many places and countries around the world. So unless something really very big and major is about to happen again, I don't think the visit back down to the previous low will happen. And perhaps the lowest low that it could go to visit maybe would be the 38.2% level at the $260 level, and so this is possible. Or maybe another visit back down to test the 50-day 50 SMA is also likely. And then after testing, show a rebound and then slowly moving its way back up again. And the next big event to look out for would be in November. That's where I think the volatility will come back again. And in November, that is when we will have the US presidential election. So I think that will be the next big event and the next uh, turbulence that the market will face by then. And we can see that today the SPY closes yesterday at 296, almost $297, and the pre-market today so far is hovering around at the same price. So it's going to open at where it is. So it is hard to say whether it can just breeze through all this resistance level like nothing, like as if they are nothing, or maybe they will get resisted again and show a red bearish candle down. So we'll have to wait and see. But regardless of the general market today, I'll be managing some of my positions and also entering a um, new option trading position into TSM. And I'll be going through all this when the market starts. All right. Hi, Johnson Tan. And I have another question here. So, do you think that the market will stay overbought? So, if we talk about being overbought, I'll have to open up my oscillators, the oscillating indicators. So what you are seeing on the screen right now is the stochastic, the MACD, and the RSI. And then the black lines that you are seeing over here, these are the Bollinger Bands. So these Bollinger Bands measures the two standard deviation of the 20-day moving average, which is not shown in this chart. All right, but this is two deviation from the 20-day SMA. And we can see that prices currently is hovering and touching the upper Bollinger Band, signaling that things are being overbought, right? But I will not lay down my judgment so soon, because other than the prices touching the upper Bollinger Band, I would also like to see the stochastic being in the overbought area, which is the 70 level as you can see on the screen. And also another confirmation that I would like to have is the RSI also going above the overbought level at the 70 level, at the 70 level boundary. All right, once I have these three confirmation, and then the market maybe shows a bearish pin bar on the upper Bollinger Band, then I will say that things are likely to be overbought, and then things are likely to be coming back down. Because if you look at the previous bull market that we have, prices have always been touching this level and they have been staying overbought if you just go by the Bollinger Band itself. And we can see that RSI itself is also in the overbought territory for quite a long time, and and a big correction never occurs until until you have all three factors being satisfied. So Bollinger Band being met. So let me draw it out. So upper Bollinger Band being met, stochastic being oversold, I mean overbought, sorry, and the RSI being overbought as well. And subsequently, what do we have? A deeper correction back down to the 40 exponential moving average. All right, and then maybe do we have another example over here? 1, 2, and 3. Once you have these three conditions, a deep correction occurs. So right now, what do we have? This is assuming that we are already back in recovery mode, right? We only have one. We have one here, two here, but the third one is not being met yet. So I will not say that it is very extremely overbought. And of course, with that, prices can still continue to go up uh, gently, right? And so the same question by Fool. Can you review Sectio? So that is a ticker that I've never seen before. So just let me take a look at it. Wow. All right. So the first thing that I spot when I look at this chart is this huge parabolic move up here. So if you have looked at my previous video where I've been doing my previous analysis, I've always been saying that huge parabolic moves like this are very dangerous if you want to uh, be chasing after the stock. All right, because these moving averages tend to act as magnet, right? And when the prices move too far beyond these moving averages, what is likely to happen is that prices will get attracted back to these moving averages and tend to snap back down very sharply and face a huge correction. So for now, entering into Sectio, I would say it is not a good time. Now, how about the history of this stock? That's the next thing that I would like to know. And for that, we'll look at the weekly chart. All right, so Sectio is a relatively new stock being IPO'd in only 2016, 2015. But so far, the performance of the stock has been rather well. We can see a general uptrend from the start to the end. This is a general uptrend so far. So there is indeed potential in the stock. So just let me also find out what this stock is about. Realize that previously we have only been talking about technical analysis. So I would also like to go a bit deeper into its fundamentals. Industrials integrated freight and logistics. Also, it's a China stock. All right. So earning per share, the growth rate is not extremely high. So it depends on what you're looking at Sectio for. All right. So are you looking at Sectio for investing point of view or a trading point of view? Yeah. So that's the next important question that has to be answered before this discussion will have can be more meaningful. But other than that, if it is for the long-term investing point of view, you can head on over to my value investing course where I break down the fundamental steps to be looking at for Sectio. And if it can fulfill these criteria, then we can say that it has the potential for long-term investing. All right. So that's going to take some time. So I'm going to cut it over here. And I have another review for Pen and Spot by Johnson Tan. So Spot, if I'm not wrong, is Spotify. Spotify, the growth rate of Spotify is not known. Yeah. But Spotify and recently looked at it before and I know that it broke out of this resistance, broke out of the consolidation level that the consolidation range that it was in since like 2019 and 2018. So likewise, same as Sectio, these stocks have already shot up a lot. So you see, another exponential parabolic move upwards. This is very dangerous to be chasing, be it for investing or even for trading. All right. So if you want to trade, so for trading, if you want to trade Spotify, one trading strategy that I can see it fit into nicely would be the breakout strategy. So for breakout strategy, what I'll look out for would be for prices to come back down and test this resistance that it has met several times. All right. So if it can come back down to test this and then show a rebound, this would be the perfect time to enter the stock as a trade. For investing point of view, likewise, the same. I'll have to say the same thing again. You have to go through the analysis, the full 5 steps, and then also calculate the intrinsic value. We only want to buy stocks for investments only when they are at fair value or undervaluation. All right. So for trading perspective on spot, this is Spotify, this is what I can say. Of course, and breakout traded strategy, you can also trade. If you talk about breakout strategy, this candle, once this candle has appeared, the next day is a very good time for entry using the breakout strategy that I am using personally myself. So this would be the perfect entry, and then the profit, you have been in much of a profit already. But we have already missed this, so like I said, we have to wait for it to come back down to test this level again. Yeah. All right, so the next one, pen. All right, I have to go through this a little bit quicker. Market is about to open and we do not have much time. Wow, this is pen. I think is a gaming stock from the name. So far, the history of the stock has been rather well. Only in this crash, it has suffered rather quite severely and badly, I would say. But it has been recovering afterwards quite well, and we can see that it has already broke through the the convergence of this moving average, as which is acting as a resistance. All right. So I do not see much of a trading setup for pen, and for investing wise, yeah, we will have to go through the criteria. Yeah, the growth rate is not that high, so valuation wise, is intrinsic valuation wise, it might not be that attractive. Okay, so for I have a question. We'll keep going higher. Now, personally, I'm not someone who focuses on commodity much, so unfortunately, I cannot give much insights on gold. Yeah, so yeah, I do not have the knowledge to say much. And if you are trading, looking to trade gold, this is the gold futures slash GC on Thinkorswim on the Thinkorswim platform. The perfect time to trade gold would be to wait for the prices to come back down to touch the 50-day moving average, all right, and then show a bounce like what he has done over here. This is a very nice pattern if traders are looking for a long trade, all right. So come back down, touch the 50, show a bullish reversal, and then take off for profit. All right. So wait for a similar signal like this to occur on the 50-day moving average again before you enter if you are looking to trade. But commodity for investing, personally, I will not take it because commodities they are mm, they are not generating value. You see, yeah. So I will not hold on to go uh for investment standpoint. Yeah. All right. Okay, so we are almost going into market open now. It's 8 minutes to market open. And let's review a little bit. So this is currently my long-term investing portfolio that I have. And then I have my trading portfolio on Interactive Brokers. All right, so this is the platform that we are looking at. So the things that we'll be going through mainly for today would be under the trading portfolio. The first things first, I want to some trades needs attention already and have to be managed. Otherwise, they will stay out of the profit zone, and I'll start to lose money. All right. So the first one being EEM, which is the global emerging markets ETF that I started a trading position in it. Yeah. And the next one would be Intel. So if you have watched my previous video on which one was it on this one, yeah, the weekend mini market analysis. So I've explained my rationale for entering Intel as a calendar spread, and the expiry for the short dated options is on May 29, which is coming soon, and we can see that Intel is currently already at $63. Pre-market is also at $63. So it needs some management. Otherwise, the profit will not be there anymore. Yeah. So EEM, Intel, and I'll also be starting a new trade on TSM. I'll be going into a lot more details in the technical analysis aspect when we start trading. All right, so this is just an overview and heads up. And if time allow, afterwards I'll go through my investing portfolio, and then there's also some trades that require attention here. The first one being Bank of America cash secured put that I sold previously, and then I'm also looking to start another new cash secured put for Bank of America, so which has recently corrected quite sharply, and is starting to recover back. Yeah, yeah, Johnson, you are saying that Baba is going to be a ride today. We'll have to see how it goes. It closed 216 yesterday, and currently pre-market it has been down. So perhaps could be due to news that US are like threatening to delist China stocks. So that could be one reason why. Well, we never know the exact news anyways. So we just have to see how it goes. But anyways, you can see from my analysis. Let me bring this back to, yeah. I've drawn somewhat of a symmetrical triangle over here. You can see that the supporting uptrending trend line has been tested several times already. So once, once here, twice here, third time here, breached a little bit, but still sort of respected over here. And then one more time over here. And then the upper trend, the resisting downtrending trend line has also been very well respected. And recently prices this broke through this resisting trend line. All right. So, and from here, this triangular shape that we have, this is the symmetrical triangle pattern that we have. So once prices broke through this, it is likely to signal that there should be more upside coming along. All right, that is just technical analysis. All right, so there will be a higher probability, but of course things could be wrong, and so just keep a open mind and perspective. If you are trading, just a reminder, always remember to set your stop loss. All right, so that you can limit your losses and manage your risk properly. All right. Okay, so personally, I'm also thinking of initiating positions in Coca-Cola, in Twitter, in TSM as well. Yeah, but for now, I'll just be taking a position in TSM first. Yeah, and then we'll see how things goes afterwards. What's my view on TSM? Yes, I'll be going into that in depth as when the market session starts, and I'll be explaining what I think about that. All right, so just hold your horses and hang on tight. Johnson Tan, fees. What is fees? Another one that I've never heard of before. Yeah, not bad, not bad. The wave-like patterns are rather nice. In consolidation for a while, in like when is this? 2017 and 2018, for 2 years consolidating, and then broke down of consolidation. And right now you can see it form another sort of a support at the $40 level and also a resistance. Maybe I'll say here, yeah, here, here, yeah, somewhere around the 55 to the 58. All right. Always remember that support and resistance do not need to be a line. It can be a zone. All right. So maybe a resistance zone over here, and a support at maybe and maybe like 39 and 36. So the areas to look out for. And currently right now it's also in sort of a consolidation, but since it is downtrend, since it is in the downtrend, what you can do is to ride the wave down. All right. If this stock can show a bearish reversal, all right, that's the signal of the bell. Yeah, back to where I was. If this stock can show bearish candlestick pattern, like maybe a red candle, like maybe something like this, on after touching this resistance level, and then starts to show signs of reversing down, then you can enter a short trade into it. All right, short somewhere here below the low of the bearish candle with a stop loss perhaps maybe above 55 level, somewhere above 55, or to be even safer above the $59 level. All right, maybe somewhere around 60, 50. Yeah, and you can have your take profit at the 40 or even $37, right? All right. Yeah, so the market has opened and let's get into business. PDD, I will address this again when we have finished the agenda for today. And ACB, that's a if I'm not wrong, that's a marijuana stock, right? So that is very dangerous. So I have look at it once when it was $9 and I think it's not doing very well. So we'll come back to that later again. All right. So first things first, let's go through Intel. All right. So Intel, if we go over to analyze, this is the current trade that I have entered previously. And you can see that my break even, if I go to set slices, my break even for this stock is at the $56 to $64 level, which I've already marked out on this chart over here. And prices are starting to move out of the profit zone already. All right. The current price right now is at $63, and today is the 21st of May. So we have only 8 days left to expiration. And there are several ways to do this. You could either wait. Sorry. All right. Previously, I've seen a bearish pin bar over here near the resistance level, and I thought it's going to go back down. But little did I know that the market is going to do the opposite and then have a big long green candle yesterday. All right. So currently, prices are likely to continue going higher before coming back down again. But no matter what, we have to manage it. Otherwise, like I said, the profit zone would you will fall out of profit zone. So, and I'm holding for Intel. You can see that I'm holding I sold a short dated call contract with a 60 strike price expiring May 29 of May. All right. And if we look at the TOS for analysis, you can see that the $60 strike is here. It has a delta of about 0.83, 0.84. It's already way overdue already. In fact, I should be managing this trade when it was yesterday when the delta was like about point 0.8. Yeah. So today, by delaying one day, hoping that prices will come back down a little, and in the end the price did not go down, I'm now in fact like losing more. You can see that on the day itself, I've lost like $25 on this trade. All right. So how can we manage a calendar spread? A few ways. One way is to roll this call option contract out into another call option contract that is like about 30 to 40 days to expiration. So on the list of option chain that you can see over here, the 19 June is the nearest, is the most perfect one. All right, with 29 days to expiration, just 1 day short of 30, but it's all right. All right, if you have gone through our option Greek analysis, you have known that theta is the time decay, which is the time decay. It decays the fastest during the last 30 days of the last 30 days of the option lifespan. So a few ways to it, like I've said. The first one is to enter at, sorry, the first one would be to roll this, the current one that I'm holding, into the same strike price at $60 that's expiring 30 days away, that have a 30 days to expiration. All right, so let's look at that. So in order to roll, what it means to roll is I have to buy to cover my short, and then I hold a control, hold a control key and click on sell. All right, and you can see that if I do this, I can have a credit of 92 cents. Let me open up my... All right, so currently this is my trade. On the 1st of May, we have entered this trade, and we have long a call, a long dated call expiring 16 October for 5:15, and then we have sold a short dated call expiring 29 May, which we have seen in the broker platform, and we have collected a premium of 170. All right, so this makes the cost of the trade at 345. And if I were to do this action right now, I'll collect another profit of 95 cents. All right, and that will bring down my cost of the trade to 345 minus 95 cents. That bring down my cost of trade to 250. All right, so go over to analyze, and then I've already keyed in the respective trade previously. So where was 250? Yeah. So if I let it maintain as a calendar spread, what will happen? You can see that if we bring our break-even prices back to normal, you can see that the break-even prices for my trade still remains the same, 55 to 66. And if we go back to the charts, 55 to 66 is not very 66. It's not very fantastic, right? So, well, why do I say that it's not very fantastic? Because I have a bullish perspective. I'm thinking that as the market recovers, and having the stock breaking out of a short-term consolidation over here, prices should likely move higher and might even go back to its all-time high. So 66 being lower than the all-time high right here, does not really satisfy me that much. All right, although this way of doing has its advantages in that I get to lower down the cost of my trade to only 250. And what that means is that if I lose on this trade, the maximum loss is only $250. So what is another way? Another way is I like to turn my calendar spread into what slowly. I like to turn my calendar spread slowly into into a diagonal spread. So a diagonal spread will have a long dated option with a lower strike price, and you will sell short dated options with a higher strike price. So my long dated option, my long dated option right now is at $60 strike. So if I want to turn it into a diagonal spread, I can sell short dated, maybe sell the 19 June contract at maybe like one strike out of the money. And with the current price of Intel being at 30 to 40 cents right now, one strike out of the money will be perhaps like $64. All right. So that's another option, and let's see what will happen if I roll the short dated call out and up. So same thing, I want to cover my short. I want to click on buy and hold the control key and go down to the 19 June expiry and right click, hold my control key and then click on sell. All right, so you can see that if I take this second option, second alternative way of doing things, of managing the trade, I have to pay an additional 150, 153 or $153. And where would that bring us? So current cost 345 and I add on another 153. That will bring our total cost of the trade to almost close to $500. So again, analyze. So that will be the middle one. So I want to buy a long dated 60 strike call, and then I sell a short dated 19 June short dated 19 June call with a strike of $64. All right, this is this is the diagonal spread that I've been talking about, and with a cost of $5. Let's look at what is our odds. So likewise, go over to break even on the day of expiration itself. All right, so right now you can see that our break-even price changes from $60 to $73, $74 right now. This is not the perfect diagonal spread that I'm looking for, because in the most optimal, the ideal cases, what I would like to see is that I'll still remain in profit even when the stock price move to infinity, right? Even like $200, I will still remain in profit. But right now we are seeing that I will go into a loss if the stock price move up too much. But our let's look at these levels on the chart: $60 and $74. So $60, that will be around here, and $74. So you can see that $74 is already way out of the all-time high already. So yeah, so I will not have to worry so much about going into a loss if the stock price shoot up that much. All right. But on the other hand, I have to worry more about the downside now, because you can see that $60 is somewhat the previous resistance that stock prices have broke through, and prices can very easily come back down to test this level again, and even go back down further to test the 50 SMA and the 200 SMA. All right. So this might be there might be a danger, all right, if it come back down and then goes down. If it comes back down near to my what's near to the expiry, which is 19 June, I might have a huge loss. All right, so let's say if it visits that level on June, let's say the last week of June, it decides to visit that level. And what will happen? That price is around like maybe $56. And what will happen to my trade? $56, I'll now be in a loss of $200. Can you look at the purple line, purple figure over here? So you can $56. You can see that I'll be in a loss of like about 180, close to $200. So that will be about 1% of my entire portfolio. So I am okay with that actually. Yeah. And I guess this would be the alternative that I'll be taking on to. Yeah. So I'll be slowly converting this calendar spread into a diagonal spread, and then as prices move up, I'll have more to gain than to lose. All right. And since I have a bullish perspective on this stock, this is, in my perspective, the better option, the better route to take. Right. So I have a question from Beneath. Why did you choose delta 0.8 to manage the Intel calendar spread? Yeah. So delta, I choose a delta of 0.8. That is because for how do I put it? For the most optimal diagonal spread, when you roll over your short dated options at a delta of 0.8, you should theoretically still be making a profit of 20 cents per dollar per every dollar that the stock price move upwards. All right. So this will be covered in more detail in the upcoming strategy video that is currently in the works. So in this video, I'll be talking about how you can generate 24% a year with simple call and put options. So the rationale of choosing a point 0.8 delta will be covered in this video as well. So hang on and then watch out for that video. All right. Okay, so let us then enter the trade. It's currently 151. So I enter my trades on the interactive broker platform, and I would like to go over to my options tab and then key in. No, sorry. In fact, if I'm rolling, I can just right click on this short dated call, and then I click on roll, and then this window will pop up. It will show. It will ask you which option would you like to roll to, and I would like to have the 19 June expiry with a strike of $64. All right, so roll to 64, and automatically it will buy to cover my short, the short dated call that I sold previously that expires on May 29, and then it will help to short another short dated call with a strike of $64 expiring 19 June, right? Which is what we have been discussing all the while. And from Think or Swim, we know that the current price is 150, 149, 153. So I'll just put it at 150. All right, and I'll submit my order. So override and transmit. And you can see that order field at 149. All right. So the next important thing as a trader is to always log your trades. And you can see that this is my trading journal for options. And you can see this is my log for Intel previous so far. These are the trades that we have executed previously. So after later on off screen, then I'll key in update the log and key in my closing position, and then key in another line of the opening position for the new option contract. And then likewise, the cost price here will be updated automatically. So what I've gone through, diagonal spread and calendar spread, these strategies will be covered in depth in their respective strategy videos as well. And these videos are in the making also. So, and they will be released in the near future. So if you're interested in trading options, do stay tuned, subscribe to our channel, and then look out for when these videos are going to get uploaded. All right. So Intel out of the way. All right, let us talk about diagonal spread next, and that is TSM. So someone previously asked about TSM. What's my view on TSM? So this is what you can see on this. This is the daily chart. What you can see on the daily chart. So far, the stock prices have been acting very nicely in wave-like patterns. Gone into a consolidation for about 2 years, ever since 2018. Broke out, come back down to test. Broke through the resistance level, in fact, a little bit, and then come back down to test this uptrending trend line very nicely and show a rebound. And then now it is faced with the resistance level at $54, and then it is coming back down, another support, being supported by the 50 SMA and the $51. And yesterday, as of yesterday, TSM has shown what's that? A bullish candle. A bullish pin bar, right? So with that, I'm thinking that the $51 support is likely to be a strong support level together with the 50 SMA, sorry. So the $51 level and the S50 SMA is likely to be acting as a strong support level, and there shouldn't be any more down downwards pressure on the stock, taking into consideration that the general market is starting to recover and things are starting to recover, all right? And this company is based in Taiwan, and Taiwan, if I'm not wrong, they do not have much problem or are already in they are already way ahead in terms of recovering. So I have a bullish view on this stock, which is why I want to take on a diagonal spread. All right, diagonal spreads, they have a bullish nature, a slightly bullish nature attached to them. And to execute a diagonal spread, what we want to do is to go over to the trade tab. We want to sell a long dated call option. We want to buy a long dated call option that is about 3 to 6 months of expiry. So 3 to 6 months, you can see that there isn't a 3 month to expiry option over here. The nearest being only 17 July, which is 2 months, and which is too short for my preference. All right. The next one being 16 October with 150 days to expiration. That is like about 5 months. And then the next one is 15 Jan, which is like too far out and too far out of my comfort to own. All right, so we want to look at, and in this case, I'll just look at the 16 October and choose that instead. So to execute a diagonal spread, we want to buy a long dated call option contract with a delta of 0.8. All right, you can see that this delta of 0.8 appears again. So with this option chain, currently we only have 0.86 and 0.75. So I'll just go ahead with the 0.75 delta one, just simply because it is cheaper by about like $400 and it will require less of my capital. All right, so I want to buy this, and buying a zero point 0.8 delta call option. What does this mean? It means that I'm buying an option that is deep in the money. So buying a call option contract that's deep in the money will simulate that I am owning the shares. All right. So when prices go up $1, the value of my call option contract will move up by 80 cents if the delta is 0.8. And in this case, it's 0.75, it will move up by 0.75. And likewise, when the price of the stock goes down by $1, the value of my long dated call option contract will also suffer greatly. So it is somewhat like owning the shares, 100 shares of TSM. And all right, so I have another question on what about AMD. So I'll come to that after I finish this. All right, so just hang on tight. Yeah. Then, so a diagonal call spread is slightly bullish. All right. So why is it slightly bullish? Because we will be selling a call option contract, a short dated call option contract, to help us refinance the cost of owning this long dated call option contract. All right. And we want to sell this short dated call option contract, likewise again with a date to expiration that is about 30 to 40 days away. And then also likewise, the 19 June expiry would be the most preferred one. All right, close to 30 days with the fastest rate of decay for theta. So let's expand that. And for diagonal call, we want to allow some movement for the stock price to move up. All right, so we do not want to sell like at the money, and we want to sell instead like maybe 1 or 2 strike out of the money. And from the option chain over here, 1 or 2 strike out of the money will be like maybe 52.5 or $53. So let us go back to the chart and look at these levels first. 52 right now, the current price is at hovering around here, and $52 sorry, what was it? 52.50, 53, yes. So 52.50 would be somewhere around here, and 53 would be somewhere here. If we go up one notch higher, it would be 53.50, which will be where the moving average converge, and also the $54 resistance level is. So this is likely to be a heavy level for resistance. So which maybe I'll take the $52, 52.50 ones, and let's see how things work out. All right, so I buy a long dated call and I'll sell a short dated call. So I just hold on to the right click, hold on to the control key and then click on this sell. And you can see that the cost of this trade is $6.55 multiplied by 100 shares. It will be like $685. All right. So likewise, before executing your trade, always analyze your risk profile. Okay, so this is the risk profile, and you can see that the y-axis is your P&L, and this is the zero mark. So anything above this zero line is your profit, and anything below this zero line is your loss. All right, and this is the x-axis represents your strike price. Okay, so we are looking at buying a long dated strike at 45 and selling a short dated strike at 52.5. So this is what our P&L profile will look like. And let's look at today. And then again, always set your break even price to, set your line to break even. So you can see our break even for this case would be at $50. And likewise, you can see that this is what I mean previously when I say the ideal diagonal spread. All right. So an ideal diagonal spread will result in this. You can see that even if stock prices move up all the way to infinity, $100, $200, I'll still be in the profit. And at expiration, I'll still be in a profit of $60 if you look at the numbers over here. All right. So this is why diagonal spread have a slightly bullish nature to it. Of course, we do not want the stock price to move so much. The most ideal price would be at $52.75. So this is the area where we would have gotten the max profit. And max profit at expiration would be $163 for us. And what happened if the stock price moved down? If the stock price moved down, at maximum, we would lose $685, which is the cost of this trade. But of course, I'm not going to allow myself to lose all the premium in this trade. The maximum that I'm allowing myself to lose is 2% of my portfolio size, and that will be somewhere about $300. $300. You can see that at expiration, $300 loss would be somewhere at like $45. Okay, so break even is 55 and I'll lose 2% of my portfolio when stock prices move to like 45. So where are they in the chart? $45 would be this strong, would be this support over here. And this is very near the low of the huge crash that we have experienced in March already. So like I've said, since I think that a revisiting of the previous low is unlikely, I think likewise I also think that revisiting the low at 45, the probability of stock prices going down, crashing down to $45 is also unlikely. So with that, I should feel rather safe about my downside. And as for my break even will be at $50. And again, $50, you can see that this is where the 50 SMA is at. So likewise, prices should come back down, have a high tendency of respecting this 50 SMA and show a bounce upwards after that. That's the ideal case. All right. So downside having protected, so an upside I'll always be in a profit. That looks ideal. That looks ideal to me. All right. So let's look at another situation. Previously, we have also considered the $53 strike. So if I sell a $53 strike instead, my call option will now, the cost of my trade will now go up to $715. And if we look at our break even for this trade, it will now be at $50.55, and I will lose my 2% of my capital at about $55. $45. So with respect to the important levels to look out for, not much difference. But what about my profit? My profit will have rise from $60 previously to now $80. So not that much of a difference, right? And since it's not much of a difference, I will go ahead with the cheaper contract. Okay, so time to execute. And likewise, I'll be executing the option trades on my interactive broker platform. So I'll key in the ticker for TSM. All right, one thing before I forget, before I execute this trade. The reason why I'm taking on this trade is because previously I've already done up the analysis for this company, and you can see that if you were to follow and apply the 7-step value investing strategy that is available on our YouTube channel, you can see that it has an intrinsic value of 54 USD. And this was done sometime back. So right now the intrinsic value would be slightly different. And TSMC has passed most of our criteria. Passed step 1, step 2, step 3 sort of pass. Step 4 is a good pass. Step 5 is also a good pass. And the last thing that we want to look at is the intrinsic value. So previously when we calculated this intrinsic value, it was done using an growth rate of 10.4%. If we go over to Finviz, you can see that the earning per share has been changed. Finviz now awards it a higher percentage of growth rate. So growth rate right now is at 16.6, and we know that when calculating the intrinsic value of stocks, the first three figure over here, have the highest weightage in terms of affecting its IV. Why? Because these three figures will be projected exponentially in the calculation. So if at 10.4% growth rate, we can achieve 54 with 16%. Likewise, we can expect this figure to be much higher. And having a higher intrinsic value, since TSM is only at $51, what can we say about that? We can say that TSM is at undervaluation. So which is why I think there is room for growth on this stock, and also adds on to the reason why I want to execute a diagonal spread for this stock. All right, if we look at the intrinsic value calculator that I have compiled over here, the last line is the calculation for TSM using a growth rate of 10.4. If you change it to 16.6, what will happen? You see that the IV right now rises up to almost $70, and that is very high. And with a current price of like 51.84, what it means is that this stock TSM is currently at a 25% discount. All right. So yeah, and that is the reason why I want to execute a diagonal spread on this. So let us continue on with the execution. And what I want is, let me choose the expiry. I want to sell a short dated call that's expiring on 19 June. And I want to long a long dated call that's expiring on October 16. And the strikes that I'm interested in is at $45 and $52.50. Right, something is All right, something is not right. It's not displaying. Oh, all right, I click on the wrong strike. That's why. Okay, there we go. So I want to sell, so I'll hover my mouse on the bid under the bid and click on it. But before that, I want to allow a strategy builder. All right, you want to turn on the strategy builder if you want to trade if you want to build complicated option trades in under interactive brokers. So here I want to sell leg. You can see sell leg, and then here we have buy leg. So I want to buy. All right, and then the cost of the trade. Previously we are seeing it. Oh, prices have moved up already. It now costs $7.10, but that's fine. That shouldn't affect the outcome of our trade much. All right, I'll still be losing 2% of my capital at about $45. Our break even will still be at like around $50. Okay, so yes, $7.10. So be it. So 710, and then I want to submit. Submit button is over here. Is being hidden. So I do not have live data. Yeah. So you take out $710 from my account, and this is commission. And let's double check. All right. Sell a short dated expiring 19 June with a strike of 52. Long a deep in the money call that's expiring 16 October 2020 with a strike of 45. All right. So this will make up our diagonal spread. Yes. And right now, and as always, likewise, you can see that the order has been filled rather quickly. All right. Okay, so time for questions. Yes. AMD is rather volatile. Yeah, because it's a rather up and coming stock that has just recently proven itself to have the value and to have the capability to compete with Intel, right? So if I don't recall wrongly, I have analyzed it before. For long-term investing, it has a rather high level of debt. If I don't recall wrongly, yeah, that is way too much for my comfort to be investing in. And for trading, we have to look at the stock price and the technical analysis, which we can go into later if time allows, right? So read somewhere that yeah, I'm not so sure about the news of AMD. Mm. And where can I register to trade in the US market? Yes, so yeah, so as Full has already replied to you, it depends on where we are from. If we are from my country, which I reside in Singapore, I can just open up an account with like Think or Swim or TD. I mean, with TD Ameritrade or like Interactive Brokers just online. Just go to their website and then just fill in some particulars, and it can be fully uh, completed online. All right. So Full, you asked me why don't I sell a cash secured put since it's undervalued? Yes, selling a cash secured put for TSM is totally possible. If I want to sell a if I want to sell a cash secured put, what does that mean? To me, if I were to sell a cash secured put, that would mean that I am ready to own the long-term stock for TSM. All right. And if I want to own TSM for long term. So if I want to own TSM for long term, for a long term investing standpoint, I'll be executing it for my long term portfolio, which is in Think or Swim, and for this portfolio over here. But the reason being, TSM is being priced at $51. So it is currently too expensive for me to buy 100 shares at one shot for TSM. All right, my dollar cost average position size is only about $1,000 per position. So TSM is way too out of the league for my account at this moment. So selling CSP is not feasible for me in terms of a long-term investing perspective. And if I were to sell a CSP for trading, I'll be looking at 19 June and then maybe sell a put at like one strike out of the money, like 0.5 delta, or maybe, I mean, at the money or one strike out of the money. So 0.48 or 0.4, 0.5 to 0.4 delta. So these three strikes, 50, 51, 51.5. And let's look at the premium. When I'm selling a CSP, I want my premium collected to be at least worth 2% of the underlying price. So let's take the worst case, 180 over here, and divide by the underlying 51.5. Yeah, it satisfies my trading criteria. So it used a premium of 3.5% as compared to its underlying price. So selling CSP is a attractive strategy, but selling a CSP again is to me, I think it's a short term thing. So you only gain on this 2% if prices go up, right? You will not capture the upside of the trade. If the stock goes to $60, $70 by selling a CSP and you are not assigned the stock, you will not capture the full price advantage, the upward swing, the advantage of the upward swing of the that's in the stock. If the stock swing upwards, yeah. So by doing a diagonal spread, if the stock doesn't move up that much, it stays at $52, you can see that I have already profited 164, which is somewhere near the profit of a CSP, right? And if the stock moves up too much, I'll tell you how I would manage the trade. If the stock moves up too much, when the short dated call is at the delta of 0.8, like I've mentioned previously for the calendar spread of Intel, I will again roll the trade out and up. So when that happens, I'll then look at the next call contract that is 30 days to expiration, and I'll again sell another strike I'll sell another call option that is one strike out of the money. And by doing this, I'll be able to capture the gain in the stock, I'll capture the profit that is given by the gain in the stock price. All right. Does what I said make sense? I hope that is clear to you. And likewise, you can see from my portfolio, I've already had an Intel. I've already done I've already converted a calendar spread on Microsoft into a diagonal spread. So currently, this trade right now is at a profit of like 1.7k, and oh no, sorry, the profit for this trade is right now at like 2.5k, and this profit largely comes from the upwards movement of the stock price from 145 to 185. And if I were to sell a CSP back then for Microsoft instead, I would have only profited maybe like at most like 1,000 market value. Cost basis $1,700. Yeah, and that's the reason why I do not do CSP for trading, because the upside potential of that trade is not attractive enough. In short, yes. Okay, so are there any more questions from you guys before we move on? So two trades out of the way, we are 45 minutes into the market, and yep. Otherwise, we'll move on to our next trade, that is EEM. So EEM also, it started out as a calendar spread with a same strike of $35. You can see that I'm longing a September 18 expiry with a strike price of $35, and then I sold a short dated call option contract that is expiring 19 June with $36.23. So this short dated call option, I've sold it a little bit too soon and a little bit unfavorable. I sold it back when it was like like when the candle was like over here. All right, when it was at the low, and then I sold a call option. So a little bit of a misplay for me on my part, and with that, I'll have to face the loss in profit along with this action. So, but that does not mean that this trade could not be repaired. All right, right now we are seeing that overall the trade is still, sorry, yeah, overall the trade is still profitable if we look at it in detail. And yeah, so 36.23, let's look at where is it right now. June 19, right? 36.23. Currently the strike is at 0.6, 0.6, 0.7. All right, I can choose to roll this contract out into perhaps the 38, maybe 37 and 30, $37.73 contract. And then let's see how things will turn out then. So this is the journal for my EEM trade. You can see that currently the cost price of my trade is at 93 cents. And these are the trades that I've executed so far. All right, so let's look at it. If I buy to cover and I sell to open, that will cost me an additional 93 cents, which is $93 per 100 shares. And I'm trading just one contract. All right, so that's all right. Let's look at it. 93 cents. So what will long 35, and I'll be shorting 19 June with $37.73. And the cost of this trade will now be 93 cents add on to 93 cents. So like $1.86. So this is my risk profile if I were to take on this action right now to cover my short dated option contract that's being sold with a strike of $36.23, and then sell to open another new short dated option contract that is expiring 19 June at a strike price of $37.73. All right, so where is my break even point? Break even would be at $36, and max profit would be $38 when at expiration, and it will be about $230. All right, and my max loss would be 280. Sorry, yeah, it will be, let's do this again. Yes, so max profit will be $200 at expiration when the stock price stays at $37.50. Sorry, $37.50. And then my max loss would be at $186. So, and if the stocks shoots up heavily, my max profit will still be at $87. So this does look like a good deal to me. Nothing much to worry, and is even when at max loss, it will still be within my 2%. It will still be within 2% of my max capital. So let's look at the levels then. a break even 34, max profit 73. I mean 37. So 34 will be somewhere around here where I will experience my max loss. And then 37, I mean 73 would be somewhere 73. 37.73. Oh my god, this is 37.73. Will be just at the high of this previous candle. Okay, that will give me much more room for stock. That will give the stock price much more room to move as the trade develops. All right. That looks like an okay deal to me, even though I have to put in more money into the trade, and that's all to blame on my part because I choose to enter this trade too early. All right. So it's all right. We will have to roll it then. And the reason why I'm rolling this, even though the strike, its delta is only at where is it? The delta is only at 0.67. I'm rolling it early and not at delta of zero point 0.8 because I'm hoping to get more of the value in terms of upside potential from this stock itself. All right. Of course, I can choose to roll it at when it has reaches a delta of zero point 0.8, but then I think that'll be that'll be like too late, especially since my profit for this trade hasn't been a lot yet, right? And I'll be losing more instead. So let's just roll it early and then we'll see how things goes. And if there's huge changes to the stock price movement, then we will have to manage the trade again. So as an option trader, you have to pay close attention to your the stock prices of your positions, and you have to pay close attention to them and then monitor them when and then manage them when needed, right? So 19 June strikes 36.23, 37.73. Yes, this is the number that's tripping my tongue out today. All right, so right, just roll to this is a simple one, and the price for this rolling will be at 95 cents. So you notice that I'm rolling only up and not out. All right, I'm rolling the strike price up, but the expiry I do not roll it out because there is still a lot of time in this contract, and this time is good for me to capture the time decay on the premium of the option, and that's the reason why I did not roll it out. Okay, so 95 cents. Submit order, accept. So cost me another 95 cents, and I'll be buying to cover my short dated sold call at 36.23, and I'll be selling to open a new short dated short call at the strike price of 37.73, expiring June 19. All right, so that's what I want to do, override and transmit, and we'll just wait for stock price to get, wait for the trade to get filled. All right, so we have more comments. Pranif, yeah, you asked me what do I mean when I said that I've entered too early? What would I have done? Yes. So the ideal, if you know technical analysis, and in fact technical analysis is going to play a big part when we are trading options, because trading options relies heavily on price action, right? So you can see that prices move in wave-like patterns like this over here. All right, and I've entered this 36.23 short call when the candle was at this point, and I sold a strike of 36.23. Where's that? Somewhere around here, yeah, just above this candle. So can you see that this is in retrospect, this is a very bad move by me, because where are we right now? This is the low of the wave, right? So in fact, I should have waited a little bit longer for the stock price to move into its next impulsive wave, hit the top like it has on the previous day, before selling my short dated call, right? This would be a better place to sell a short dated call to capture the premium instead. And that's what I mean, right? So yeah, why do I want to play EEM? Top top 10 top 10 holdings, mostly Chinese stocks. Yes, EEM is a global, is an emerging markets ETF, and it is high. I think they if you split up their holdings by country, China, if I'm not wrong, takes up like 30%. Yeah. So, but anyway, I'm bullish on China. Yeah. Besides US, China is the next biggest country that can offer the highest percentage, highest growth potential. So this is the reason why uh this is the reason why I am bullish on China. So it doesn't bother me if I take on positions in EM. And in fact, I'm also investing in it. And you can see that I have a position of almost 200 shares in EM with a average cost price of $41. Yeah, currently in a loss because of all these news in the global economy, and yeah. So, and in fact, I still hold another cash secure put, CSP, just like we have said previously. I have a CSP on EEM previously on that I've bought at the low of the crash with a strike of $35, and I took advantage of the high volatility to capture a premium of $3.40, right? So you can see that this is in by itself is a 10% premium of the 10% premium of the strike price. So I'm comfortable with EM, but if you don't believe in China that much, then perhaps you should yeah, the best suggestion would be to steer clear of them if you do not believe in the country. All right, and that's investing. So trading is another reason. Why do I trade EEM calendar spread? Because ETFs by their nature, they move very slowly, and calendar spread is a neutral strategy that gives you the most profit potential if a trade can move sideways. And you can see this is the stock price. If we go on to the weekly chart, ever since its history, it has been in somewhat of a consolidation consistently, right? So I want to capture this sideways movement by executing a calendar spread. And in the case if stock prices were to go up, I can turn the calendar spread slowly into a diagonal spread. So this is my rationale for initiating a position in EM back in fact, this trade was initiated during
Order
the
filled.
during the crash. Yeah. So you can see that the EM trade was filled as we are speaking. So it was executed somewhere around here. I can't remember exactly when, like in the March and April period, right? So yes, you guys have been discussing about AMD. So in fact, AMD is very crazy. I was trading it using the I was trading it using the diagonal spread strategy. The entire of Not say the entire, the maybe like two three three quarter of 2018. Was it 2018 or 2019? 2019, sorry. Yeah, 3 quarters of 2019, I have been trading AMD using a diagonal spread, and that has been my largest winner for that year. And largely also because AMD has been the largest mover of 2019, right? They have the stock price of AMD has gone up like 120 over percent just in 2019 alone. So if you look at the weekly chart of AMD, let me clear out all these lines. You can see that the stock respects the 50 SMA and the 40 EMA quite a lot. So right now it's currently at a high, facing a resistance, the previous resistance at like $57.74, close to 58 or even $60. So this is the resistance zone that is being faced by AMD right now. So are you investing or trading? You mean AMD? AMD, I am trading. Yes, I'm not investing. So as I've said previously, AMD, I've gone through. I was interested in trading it, but then as I apply my value investing strategy to it, I realized that they failed quite a large number of steps, and therefore I'm not so comfortable in trading. I mean in investing in them for the long term. All right, so that's why I'm trading it. And speaking with a trading perspective in mind, for AMD, the best time to enter this company as a trade would be perhaps wait for them to retrace back down to the 40 EMA again, $44 or maybe $47 before entering, right? And there is one potential setup. Wait for it to bounce off the 40 EMA. Another potential setup is, let's see if we can see this clearer on the daily chart. Now, on the daily chart, can you see this pattern? Would this be a better trend line? No, I don't think so. Okay, do you see this pattern? Resisted once, twice, forming a potential resistance, and then a potential uptrending support that's supported the price once, twice, and the third time recently. All right, so this is what we call an ascending triangle pattern. So prices in an uptrend and then consolidate for a while. So ascending triangle is to be considered as a period of rest or consolidation for the stock prices. So what will happen if this pattern is indeed true is that we would see prices break out and go further and go up further. So if you want to trade on AMD, two ways. First one I've already said before, wait for it to come back down, test maybe the $47 or $44. That is one way and show a bounce. Second way is to wait for it to break through this $57.50 resistance level. Wait for it to break out, form a entire bullish candle above the resistance. The chart is rather small. Let me enlarge it for you. So first way, wait for it to hit down and show a bounce. This is number one. Second way, second setup, wait for a bullish candle to form entirely above the resistance level, and then enter your trade enter your entry price above the high of the bullish candle. So this will be the breakout setup, breakout of this ascending triangle pattern. All right, so this is the second way. What is the third way? The third way is a safer way, in my opinion, is to wait for the price to break out, go up further, come back down, test this previous resistance level, which now should be a rather strong support. Wait for it to test and then show another sign of rebounds before entering. So this will show that this level is indeed important and heavily respected by the market participants out there. So this is the third way to enter this trade if you are looking at a trading standpoint, right? So thanks for your sharing. Yes, I thank you for supporting and staying with us as well. So are you trading the stock or using option? So a little bit about myself. I am I used to trade stocks. I used to swing trade stocks, right? That's why I know so much about all these strategies and all the price movement and everything. But I realized that the downside of trading stocks is that it requires a large amount of capital from your side, right? So let's say we trade AMD. If we want to properly trade it, at least according to my strategy, we have to buy like at least like what 100 or 200 shares, and that will take out like 5,000 to 10,000 of your capital, right? So, and 5,000 or 10,000 of my capital is already like what 50% of my entire portfolio. So if I swing trade stocks, I realize that at most I can only take like how much? Maybe three to five positions, trading positions, before I have to utilize margin. And if I eat into margin, I have to pay interest fee. I mean the interest charges, and the interest charges can be rather high. At the peak point of my stock trading career, I realized that per month I have to pay like $40 for interest charges, and $40 interest charges at that point in time is like how much? Can't remember, like maybe 0.5%, 0.5% of my of my profit. No, am I right to say that? Yeah, about 0.5% of my profit a month. Yeah, so this is the downside of trading stocks. You need high capital requirement, and you can take on limited number of trades. But if you use options, you can take on more trades because options, they are highly leveraged and they only requires a little capital from your side. If you have been with us ever since the start, and you have seen me executed all my options trade previously, I only need like what $700 per trade, or like $90, $95, $100. So with that, I can allow myself to take on more trades. So you can see I have a trading position in Activision, in Bank of America, in EEM, in Intel, in Microsoft, right? So after taking on all these trades, I'm still left with what? With like 5,000 USD spare to take on more trades. And 5,000 is not all, okay? Because I have some cash converted to Hong Kong dollars, as I have been trading cash secured puts for on Hong Kong shares. Yeah. So yes. So largely right now, currently I'm more of an option trader rather than a stock trader. Yeah. But when the opportunity rises, I'll still I'll still swing trade stocks as well, but just lesser. I mean, if I have the capital to spare, then I'll swing trade stocks. Yes. So trading stocks is much easier and easier to manage. You just have to fire and forget, right? And set your entry price, set your profit target, set your stop loss, and then you just let it run. It's either hit your profit target or hit your stop loss. You don't have to do anything to it. But option is more tedious. But then again, to me, the profit potential of options can be much higher as well because I can take on more positions. Yeah. And also, likewise, the risk is higher as well. So make sure that you know what you're doing in the options field before executing your trades. All right. Okay, so we are running out of time. Do you guys still have any questions? Yeah, Fu, previously you have said that you hope I can do this live session every day. Yeah, thank you for supporting, and I'm glad that this session is useful to you. If possible, I would like to have it every day as well. Yeah, so in future I might be scheduling more of such sessions with you guys. So likewise, do subscribe, and if you have you do subscribe if you are new to the channel, and so that you can receive more updates from us. Yes. Also, you can also go over to our Facebook page and then follow and like us. This is where we will post our upcoming videos and also live sessions, and also like daily tidbits, if any, on stocks and market related stuff. All right. So yeah, that's a little bit on about us. And previously we have a ACB. Let's finish this up. Can I do a session to find good stock for investing? Yes, of course. Mm, oh, ACB recently reverse splitted their stocks. No wonder my lines are all over the place. Okay, yeah, back to your question, sorry. For value investing, right? Previously, we have done a lot of videos on value investing. So you can see we have done like FedEx, like Micron, the FANG stocks, China stocks, 5G stocks, credit service industry, cruise, which has been heavily beaten down recently, coronavirus proof stocks. I hope you have seen this, and you can see that Activision is in there also, and which is why I take it on as a trade in my portfolio. So if there is, yeah, if you guys would like it, I can definitely schedule a session and where we can discuss and maybe analyze things together, right? I can go through the full analysis for the value of the value investing strategy, and then as a community we can find potential stocks to look at and value invest in. All right, yeah. So ACB previously, once I traded on it, right, when it was at $9, which I don't even know where it is on this chart anymore, right? And I was glad that I got pulled out, I got stopped out before the huge crash happens, right? And you can see that this stock, look at the history of this stock. It started in like somewhere in 2015. It has been going up because of all the weed stock, all the weed hype, right? All the medical legalization of weed and marijuana or something like that. Yeah, I'm not very familiar with that field. So with all the hype, it has been doing rather well, but I don't know, for some reason, maybe it lost out to its competitor or something, and then it went downhill all the way. So for trading, let's look at it, ACB. I would say that this stock is not so much for investing, right? Definitely with all these blanks all over the place, we cannot even properly analyze its fundamentals to invest in. Okay, so for trading wise, perhaps you could look at shorting, because you can see that currently it is in a downtrend. The moving averages are all very nicely aligned. 200 by 150 by 100 by 50, the SMA. Of course, yeah, because of some news recently, right? Like some of you have said previously that it has recently shot up, but yeah, it's rather unstable to me, and I'm not very familiar with this. With the current situation, it is quite hard to trade also because of the reverse split and then of this shooting up of the prices. So in a sense, it doesn't obey the rules of technical analysis as much. If you are talking about before this happened, right, all the way to the right, this would have been a very good situation, a very good time period to trade the stock and to short it. Every time it reaches the 50, reaches near the 50 SMA, short it down. Reaches 50, short it down. All right, reaches 50, short it down. That will have You have been a very good stock to trade that obey and a very good stock that obey price action movements as well, right? So my thoughts on value versus growth investing, as well as dividend. All right, so just to clear things up, the value investing strategy that is being covered in our channel, all right, this value investing course has the component of growth factored into it. So you can say that this is also a value growth investing already. So it has both the component of value and growth. How do we determine growth? The growth is determined by the first 5 steps. Step 1, 2, 3, 4, and 5. The first 5 steps of our analysis. of our strategy. And these first 5 steps mainly focuses on fundamentals. This is how we determine growth. And how do we determine value is through step 6 and step 7, intrinsic value calculation. So that is being covered in these 2 videos. So that is value. So to me, value growth investing and dividend investing both have their pros and cons, all right? Of course, the nature of these two is very different. Value and growth investing, you capture the you stand to gain by the stock price going up, by capital appreciation. This is the main avenue main avenue of you accumulating your wealth. And for dividend investing is more like a cash flow type of investing, right? So by doing dividend investing, you are more focused on the dividend yield that it gives you, that it generates for you. And in a sense, this dividend is like a passive income. Whether or not you want to reinvest this dividend or you want to live off this dividend are possible options, right? So both have their pros and cons, and I'm not biased against one or the other. But you are seeing more of the value growth investing on our channel because uh, because I'll say that, how do I put it? Okay, mainly because I myself am a foreigner considered to the in the US standpoint. I'm a foreigner, right? So if I were to take on a dividend investing in the US market, that will not be so favorable to me because I have to pay a 30% withholding tax on my dividends. So therefore, the US markets become more of a better place for me to take become a better place for me to take on my value and take on a value growth investing approach. And as for dividend investing, I I do take I do I do have a dividend investing portfolio also, but it is in my own local market. And for that, I look at REITs, look at banks. And my criteria for dividend investing is that your yield should be at least 6%. All right, if your portfolio can return you a yield of 6% annually, then I would say that that would be a good enough dividend portfolio. Okay, so futures trading, not so much. I do not do futures trading, but futures options, rarely. Yeah, I used to trade a little bit on the options on gold and natural gas. So if you want to do futures options trading, personally, I feel that the better strategy would be iron condors these are because futures market are very volatile, right? They are mainly commodities and they are very volatile. So given their volatility, iron condors can give you a uh, very wide range. How do I put it? A wide range of profit. All right. So so yeah, that's the reason why I'm I prefer applying iron condors on futures. But then I do not do much futures trading because mainly because of my own personality and my character. I like to see things to expiration, and when doing iron condors and doing iron condors on a volatile asset class like futures, that is very unfavorable because you have to close it. You can't see it to expiration. The longer you wait, the higher the risk of the prices shooting out of your profit zone, and then you lost. And personally, if you look at my trade journal on iron condors, I have done like four trades, four trades on futures options: natural gas, gold, euro, and natural gas again. And out of the four trades, I only profited in like one, and the rest of the three I are in a are closed at a loss. They could have been closed at a profit, but like I said, because of my personality and my character, I like to to see things to fully expire, see the option contracts till they fully expire, and that is why I take on the risk of prices shooting beyond, right, shooting beyond my profit zone, and then I end up in a loss. So yeah. So can I take a look at Yoma STI? So is that a SGX stock? What's that? Johnson Tan, may I know what stock is that and where is it? Which market is it in? Yoma STI. You mean this Yoma Strategic Z59? I personally I am not very familiar with the Singapore stocks, all right, because Singapore market is not, I mean, personally I feel that the Singapore stock market do not offer much room for growth, and yeah, not much room for growth because of the nature of our economy, right? We are much more reliant on other countries like China, like US. So whatever bad things happen to them, we take a hit as well. So the growth potential of our own market is not very great, and which is why I generally tend to only look at the REITs and the banks for Singapore. And I have totally no idea what this company is about, but from the stock price, it's from the price action itself. And another thing is Singapore stocks, the data, fundamental financial data for them are quite limited, so it's quite hard to analyze as well. Yeah, full. Yes, you typed out my mind. Yes. So yeah, in somewhat of like a downtrend, you can see trend line. Oops, somewhat of a downtrend. Rather, no, sorry. So this is a monthly chart. So this is the monthly chart. Yeah, and really things are not looking that good. It's like it's in a downtrend, right? So yeah, Myanmar play listed in Singapore. Then all the more it's going to be complicated, right? So I can't sad to say I can't offer much. I can't offer much take on this stock. Yeah. So again, like I said, Singapore stocks are better for their yield. So mm, if the yield is good, you can consider. I want to say that you can consider, but then again, prices are moving down. So even if the yield is good, you are losing out on your capital. So yeah, my chart is two way, two out. What do you mean by that? I have another comment to take a look at OIS. My chart is from 212. Yeah, this is the monthly chart. I want to take a overview of this to get a overview of this company and how it's performing, right? So which is why I rely on the monthly chart. Okay, nevertheless, bearish for the US market. Where is my SPY? SPY 295. Yeah, kind of expected, right? Because they are at a resistance. So if they cannot break through this resistance, like I said at the beginning, is either they shoot through, they go through this, they cruise through this within the trading day, like as if they are not there at all. Or if they cannot go through this, they will just go down, come up, go down, come up, and then one day just gap up above. All right. So just like this huge gap over here. right? So don't be surprised. Can't break through the 61.8, can't break through the 61.8, retrace a little bit. The next thing you know, gap above it. All right. So this scenario can happen, and in fact, it has happened many times before. So look out for that. Yeah. And OIS, yes. OIS is it an ETF? This is definitely not for investing. All right. You can see that it is in a long-term downtrend. Prices have been just going down and down and down. Or it's not an ETF because there's earnings. So it's a oil company. So oil recently took a hit, and because of all the oil tension and everything, so I would suggest for investing to steer clear of this industry like oil, cruise, and yeah, and the sorts, right? Resorts and casinos, airlines, all these all these companies and industries that have taken a hit from the recent oil tension, the the coronavirus incident, stay clear of them because there's still a lot of uncertainty baked into them, and because of all this uncertainty, they are going to recover not that fast. All right, and why look at all these companies when you have better high growth companies like your Microsoft, like your Activision, Adobe, Apple, Facebook, Alibaba, and so on and so forth, right? So for trading, I do not see much of a setup as well. All right. You can see that it was in a huge downtrend, and then it is currently at somewhat of a retracement, a rally. And whether or not this rally will continue back into an uptrend is still too early to tell. All right. For all you know, it could continue go up, hit the 100 SMA and then go down. All right. And yeah, if you're interested in this, you can look at it at using what's that, the Fibonacci retracement tool. All right. Maybe you take somewhere here and draw. Yeah, 38.2 is at the 100 SMA, right? So it's still early to tell, and I think it's going to be quite hard to trade as well. Okay, so it's 11 right now. You can see on my time, 11 p.m. So it's getting rather late, and I guess that's all for today's session. All right, thank you all so much for all the interesting insights and all the chats and discussion that you have brought to my session today. I've gained a lot from all your suggestions as well, and your introduction to the new stocks like Pen and what's that? Yeah, I have to go back and review them and then also put them into my watch list and see if there's any potential trade setup. All right, especially Spotify. Spotify seems like a good target for trading. For investing wise, right now, I'm not so sure. Okay, so unfortunately, there's still a lot more that I want to go through, especially on especially on a trade on Bank of America. But I guess that's all for today. And if time allows, then perhaps we'll do another session, live trading session. If not, I'll record it offline and then upload it into our channel. All right, thank you all so much for tuning in with me and supporting the channel. So make sure to drop a like and subscribe to the channel to help me push my content out to a wider audience and so that more can benefit from the content that I have to share and offer to you guys. All right. So with that, thank you so much again, once again. Yep, time to sleep. Good night and goodbye. Have a good trading day ahead, especially for the US viewers. All right. Thank you and goodbye.